Everybody, it's Victor Medina with Medina Retirement Planning, and welcome to our channel, which is all about helping make sure that you've got great peace of mind as you enter into retirement. So today's episode is about our Wednesday wisdom, and specifically I want to talk to you about what's going on with Reddit, GameStop, and what that has to do with why their prices are skyrocketing. And so in order for you to understand kind of what's going on, you may have heard a little bit in the background of financial news about how stocks like GameStop, AMC, BlackBerry, and some others, their prices are skyrocketing. They're being fueled by a lot of individual investors. And you might be wondering, first of all, what's going on and what does it mean for you? Well, in order to explain that, I got to take a step back and make sure that you understand what Reddit is, and then we can kind of build out the rest of the conversation. Now, Reddit is very similar to sort of a bulletin board, a place where people go to post ideas and things online, and they're there, usually anonymous bloggers. You really don't have to be anybody in particular. You can be anonymous all the way through. But the idea there is that people have a lot of opinions. And on the opinions, they'll create what they call subreddits, where we're going to go into some detail around something specific. You can do one for knitting or yarning or basically whatever you want. Well, there was one called Wall Street Bets, or WSB. And inside of there, what was happening is that people were upset that Wall Street, and specifically one particular big trader, had made it public that they were short selling stocks like GameStop. Now, what is short selling? Well, short selling is essentially making a bet that the value of that stock is going to go down over time. And that's a little bit backwards in the way that you might buy and sell stocks, because the traditional way to say, I want to buy something low and then I want to sell it high, and then I've sold it for more than what I bought it, which means that I get to make some money. When you're short selling, you're flipping the time order, but you're still doing the same thing about buying high and selling low. So I want to buy at today's, I want to sell at today's price, and I want to lock in a right to buy it sometime in the future. And so if I buy it in the future low, but I've already optioned to sell it today high, I've still bought low and sold high. That's essentially what short selling is. You're making a bet that the value is going to go down. Now, unlike traditional investing where you buy low today and worry about how it's going to be in the future, when you do the traditional investing, you essentially have a limited amount of risk. Though you have a risk for whatever money you put in. It could go down to zero and you've lost the money that you've put in, but that's it. When you short sell, though, there is unlimited risk. So if I've agreed to sell it for today's price and I have to buy it sometime in the future, it could turn out that I have to buy it for an incredibly high price. If that price goes higher and higher and higher, my downside is almost unlimited. So what happened? The Reddit folks did not like the fact that they were going to be short selling GameStop and essentially conspired to go drive the price of that stock higher and higher. In essence, it was almost like a Occupy Wall Street movement for individual investors that were going to drive up the sale price of this particular stock to make it very difficult for the Wall Street investor to make good on their bet that the price was going to go down. And so they did. And so they were using trading platforms like Robinhood and other ones that are very consumer friendly to get onto to essentially drive the stock price high. What does that mean for you? Well, it means that you have a stock price out there that is artificially high. That's nothing to do with the fundamentals of the company. The price is not a reflection of what the company is doing and what its projections are in the future. It is the reflection of the confidence of the people that are buying it to drive the price higher and higher. Now look, institutional investors have been manipulating the market like this for a very long time, and they use large dollars to do it. In fact, you can go and do research on ways that they've done that in the past. And this is a set of individual investors that are manipulating the market in a particular way. What should you do with this information? Well, the answer is absolutely nothing. Sound investing is not about taking gambles on what the price of a particular stock is going to be in the future. That's not sound investing. In fact, one of the things that's at biggest risk here is that you getting into the fray of this are going to have no control of the direction that it goes. It's like stepping in to a high-stakes poker game where both sides are really well-funded and you think that you're going to ride on one or the other. You don't know who's going to win at the end. Interestingly enough, when we think about the reason why they've identified these particular stocks, look, people have been talking about shorting stocks and positions for a very long time. Their belief about the value of a company going down, it's been there for a while. Why did Reddit get behind GameStop and BlackBerry and AMC? It's really because these are the companies near and dear to their heart. I mean, I don't want to generalize around a group, but understand that they could rally behind GameStop because these anonymous bloggers are big gamers. They went to the mall and shopped at GameStop. So they don't like the fact that someone is manipulating a favorite child of theirs from their childhood when they were around there. Same thing with movies at AMC and even those people that really like embedded keyboards on things like Blackberries, and they decided these are going to be the causes that they're going to champion. Again, what should you do? Probably stay out of it entirely. I know that when it comes to the advice that we're giving our clients, we're letting them know we don't believe in making bets on the direction or the movement of the market like we could make some form of prediction on short-term results. We think it's impossible to do that. In fact, nobody could have predicted what was going to be going on right now. Just take a step back. Imagine that you were a week ago and you heard that someone was going to be shorting the stock, and so you decided to get on board with that. And then the stock price went up and you are at a very high risk of what you have to lose off of that because the price is going up and up. Was that the right bet? Probably not. What if you waited and you're now on the side of where the stock price is increasing? Is it likely that this is going to come down? Well, maybe. And if that happens and you placed a bet like it was going to go up, up, and up forever, you're going to be on the downside of that as well. See, it's impossible to make a really strong prediction in the short term about what any particular stock was going to be doing. At least that's our belief, and that's the way that we counsel our clients. So what should you do? Stay out of it. Enjoy it, by the way. It's almost like watching Casino Royale, the Bond movie. Sit back and watch the crazy people do crazy things, but make sure that you have a sound investment strategy for your plan to make sure that no matter what's going on the outside, it's not going to affect you personally. It's the most important part of a plan is to make sure that you're insulated from the shenanigans that are going on outside of what people like Reddit or other institutional advisors are doing. If you like this video, go ahead and click and subscribe, share it, and hit the like button so that other people that are searching for information like this, YouTube says, hey, this is a good video for that, and we hope that you will stick with us and join us as a subscriber on our YouTube channel. I'll catch you again soon. Bye-bye.